I recently saw the headlines of an article, a statement from JP Morgan CEO that their AI tool on cash flow has slashed manual work by 90%. While this may be interesting news for some tech geeks, a lot of common people like you and me naturally get that fear and start to question ourselves that are we going to become irrelevant? Will AI take over accounting and finance? Will AI eat away my job? Here's my take. Yes, AI will eat away some jobs, but you don't have to worry. Before I go on, let me clarify that I am not going to give you some cliched advice like you have to adapt to the new changes, change is the only thing that is constant, and so on and so forth. I am sure that you are already aware of that. This video is a detailed walkthrough on how things turned out to be just fine despite the disruptions that happened in the past. This video gives you the hope that amidst all the seeming chaos, you still don't have to worry. This video is structured into four main segments. The first segment is I'll explain the basic principles of inventions and their consequences based on studying history and economics. In the second segment, I'll talk about human optimization. This is the most important segment of this video. In the third segment, I'll combine the basic principles and human optimization and fit that into a real life example. In the fourth and final segment, we will see how all of this applies to the accounting field. Since each and every segment builds upon one another, I would recommend you to go through the entire video linearly to get the complete picture. Segment number 1, the basic principles. If you look at history, it is so undeniable that big changes will keep happening once every 25 to 30 years. And people will panic every time such a change occurs. People panicked when computers were invented. People panicked when cars were invented. Those changes happened anyway despite the people's fear, but eventually things became better. I'll give you a pattern. I call this my problem solution spiral. It's not a cycle, it's a spiral. I'll tell you why. At the start of this spiral, there is some pre-existing problem. Somebody finds a solution for that. That will lead to a disruption. This disruption challenges the status quo. Life gets affected for some people or industries in the short run. This is unavoidable. But the invention does the job. Either it shortens the processing time or it scales the volume of output. And because of this faster processing, a larger group of population gets the benefit. The economy prospers, a whole new level of opportunities arises, more people get employed, and the overall standard of living improves. Now humans start to optimize. This is the most important part of this spiral. Without understanding this component, the whole video would miss the point. I will talk about this step in detail up next. Because of humans' tendency to optimize, life becomes more complex than ever. New problems in multiple different dimensions arise. Again, somebody or some group of individuals breaks their head and comes up with a new and bigger solution, and the spiral gets bigger and bigger in every next iteration. Segment number 2. Now let us talk about what is human optimization. We humans just cannot sit quietly and chill forever. Just like our tendency to survival is inbuilt in our DNA, the tendency to optimize is also inbuilt in us. We are creatures of optimization. I'll give you an example. Consider inventions like washing machines, water heaters, in-house plumbing. They were machines invented to save our time and effort. But did these inventions really achieve their purpose? The answer is no. Because if these inventions achieved their true purpose, then we would be living a quiet and free life all the time. But we have become all the more busy than the previous generations. And it will always be this way. New inventions only solve the problem of the hour, and that solution would give rise to 10 new problems. I will tell you how. 100 years ago, when there were no cars or bikes, a typical worker chose his job within 5 kilometers from where he lived. It took an hour for him to walk to the workplace, be it a paddy field or a blacksmith's workshop. Then people invented bicycles. Now it took the same worker 20 minutes to reach those 5 kilometers. So previously it took him a total of 2 hours every day on commuting. Now it's only taking him 40 minutes per day. Thereby, he saves an hour and 20 minutes every day. That means the worker should be at home living quietly and chill those extra freed up minutes, right? No, the worker did not stick to that equation. He did not sit at home quietly and chill. Instead, he wanted to optimize that. He started thinking, what if there is a better job 15 kilometers away? Now that I have a cycle, I can go and make a search for that. And most likely he got one as well. Now his workplace is 15 kilometers away instead of 5, but it still takes him the same 2 hours of time and effort in the name of commuting. Sure, the invention of the bicycle led him to go to much farther places. His territory has expanded, but he is not quiet and free. His life is as busy as it used to be, if not more. This is the result of our innate nature to optimize. Segment number 3. Now let us take the concepts we discussed in segment 1 and segment 2 and fit them into a real life case study. In the early 90s, computers were becoming popular. Again, people predicted doom the same way, but what actually happened? Because of mass computerization and the spread of the internet, things started to happen faster, especially in the banking industry. I remember in the 90s going to the bank with my mother to withdraw some thousand rupees. This was before ATMs, before banks were fully computerized and linked through the network. The bank was located 10 kilometers away and we needed to catch 2 buses. My mother used to pack lunch for both of us because going to the bank to withdraw or deposit money was almost a full day job. Also, previously, when somebody had to make payment to us other than cash, they issued a check or a draft and it took at least 3 to 4 days for that to be cleared. But now we can receive or send money in a matter of seconds. It was like people in the 1990s were living life at 1x speed and now we are living life at 10x speed if we compare it with the 90s. So there was a problem, which is banking was slow. Somebody came up with the solution. The disruption happened. Processing speed increased manifold. People began to get access to money faster and faster. Economic prosperity happened, standard of living improved, but then humans' tendency to optimize kicked in. We were not happy anymore with just NEFT and RTGS. We wanted to do much more. This happened through integration of payment gateways to e-commerce and educational payments. We started to book tickets, pay fees, and purchase lifestyle goods and services through online banking. Thus, online banking became the new normal and it drew more and more people into the banking ecosystem, which made the ecosystem more and more complex. More banks came into the picture and pre-existing banks started expanding with more and more branches and spent more money in building better capex. Check how many banks existed in India in the 90s versus how many exist today. Also check approximately how many people were employed in the banking sector in the 90s versus how many people are employed today. If computers were to take away jobs as feared at the time, there would only be some 5 banks and roughly 5,000 people employed in the banking sector today in the whole country. But that's not reality, right? That's the same way it's going to be with AI as well. Segment 4. Now let's fit all of this into accounting. Future in accounting might look somewhat like this. I'm just letting my imagination run here. Suppose a vendor sends you an invoice. You may just have to simply scan the invoice and the AI would read the contents of the invoice like Google Lens. And then it would go one step further. It might pull the details directly from the vendor master and material master and might pass the accounting entries on its own. Or even better, there might come a day where accounting department doesn't even get the paper copies of the invoice anymore and gets only the digitally signed invoice in the email. Now the AI might directly read your office email inbox, identify the new emails, identify the sender, scan the attachments and go ahead to account the invoices on its own. I know it's a weird example, but even if AI takes over the accounting process by this much, we still don't have to panic because there will always be a necessity for some human supervision at every important point in the workflow. Remember I gave the Google Lens example earlier. Even though Google Lens does 90% of scanning, it does make some errors and we need to edit the text it scanned. So even though the person who needs to type the account and invoice might become irrelevant in the future, the person who needs to cross-verify the entry after the AI posting would very much be required. In other words, data entry might become irrelevant tomorrow, but data validation will never become irrelevant. And if you want to validate data, you still need to learn and know accounting. You still need to make decisions and have the expertise to make your judgment. Remember, when calculators were invented, accounting happened through calculators. Humans still worked in accounting. When computers were invented, accounting happened through computers. Humans still worked in accounting. Tomorrow, if AI really takes over, accounting will happen through AI. As long as there is money, accounting will always exist. And humans will still work in accounting, keeping AI as an assistant and not the boss. Even if companies lay off people from accounting who are doing entry level jobs, it is only going to be short term. The urge to optimize will kick in eventually. The companies would be itching to reinvest the time and cost saved up by AI in some other avenue. That would increase the complexity of the system. Therefore, the same company that laid off some 100 people would now want 500 new people in their new venture. If you see only the first order consequences, it will create fear. The first order consequence here is yes, AI will eat away some jobs, but we need to learn to see the second order and third order consequences. And that is, inventions never solve a problem in the long term. They only give rise to newer problems, and newer problems mean newer opportunities. In case you are new to my channel, I am Harish and I am a chartered accountant. I make videos that help CA students in their preparation. If you are a CA student, you can check the other videos on my channel. I'll see you in the next video. Thank you and bye bye.